Morten, welcome back. First of all, thank you for taking the time. I know it's busy days as always, so appreciate you taking the time.
Thank you for inviting me.
So you've been busy in 2025. Some high-level thoughts on the year so far. You've been on a journey in several segments, but if you go macro first, so much talk about the recession, financials don't add up, but still we're holding up quite strong. Is that artificially strong or is it fundamentally strong?
Good question. I mean, if you look at the overall price earnings levels, they're high, but it's a big variation between the different segments. And you have, for example, the Magnificent Seven are not enormously expensive today. If you look at their potential and also that they actually have solid businesses underlying. And also the fact that we don't know if there will be too many dollars going forward or too much money being printed. And hence owning stocks in many cases is sort of inflation proof. And I think that's easy to forget in these times.
Is that a different feeling versus the dot-com bubble? Because I know you were active during that time, but when you look at deals, OpenAI and NVIDIA, all the orders coming in, all the revenues coming in, is that like distinguishes a bit so far? Or can it still be a bubble territory?
Yes, a bit. I mean, the markets at that point were not so sophisticated. The companies didn't have as much revenues as now. That said, it's important to remember that it took 16 years for Microsoft to get back to the 2000 levels. So even though it was a good company, it was the market leader, it took 16 years for it to come back to where it was at the top in March 2000. This can obviously happen once again with all the AI companies. And I think one item I looked through this morning, and if you look at the big shapers at that time, the industry leaders, a lot of them, almost all of them, are still there today in some shape or form. Many of them, or some of them as leaders, Oracle and Microsoft, for example, Amazon as well. Whilst one could discuss if Nokia is a leader or is alive, but maybe not a leader. Whilst you have a lot of those number twos and number threes, they don't exist at all. And there are a couple of things there where it's important to remember that when, for example, OpenAI puts an order with NVIDIA I would assume that NVIDIA will take then will record this as revenue on one side. But in the books of OpenAI, I would think that it's capitalized. So that means that you kind of create money and it goes in a circle in many cases because NVIDIA also invests in some of the customers. So as long as that wave continues, the figures are blown up and therefore the price earnings are not too high. But what's actually going on when it turns, the revenues or the bottom line will fall much faster than the actual economy. And then you could obviously the price earnings then suddenly become not 22 or 25 or 28, but maybe 200 because it just turns. So that's the big X factor, I think, going forward.
But you have a broad appetite in sectors you look at and invest in. Is US tech in that appetite, or is it,
I regret it hasn't been too much. But for the first time now, this last 12 months, I've been invested in tech, actually. There are two cases. One where we came in, the bond fund was in as a creditor. And when the bond fund was then fully invested, I was able to invest privately as well, which is Ellos group in Sweden, one of the biggest Swedish retailers when it comes to clothing. And also in furniture, and we became shareholders through the bonds, and it's basically I see online retailing is there to stay, I would say. That's sort of the main thesis. I hope we got in on a good level. And that's usually the case when you come in via the bonds, because it's kind of rock bottom when a company has to restructure. And then you create momentum when you get out of restructuring, and all the employees then know what's going on, and it's a more stable situation. And now as well, with the falling interest rates in Sweden, that could be quite interesting. When it comes to the huge AI companies, I am not in there. I should have been there. What we saw in 2000 is that, again, very few survived. And those that did survive, they had a long run before they came back. And sometimes expectations are a bit higher than people's kind of appetite to adapt.
Definitely. So, you talked about Ellos, which is you're used to restructuring steel on water, where it comes and goes, and companies, it's sort of in the nature to restructure them. While this is a company which, from my understanding, is quite unique. People usually have worked there for a long time, wear the watches of, good service, and I think it's over 80 years or something like that. So even for you, this is maybe a bit of a unique opportunity to get into this sort of company and being there for the long term, because I think, if I recall you correctly, and I also have some history with you, when you enter something, you plan to stay. It's not like you're there and then leave. Hopefully not.
And I think that's important when you go into a company, and it's not it's not a very liquid company, or if you own a lot of it, it's not just to sell anyway. So you have to have a long view, and you should always have a view that you kind of, that the business model is so that you can stay forever if you want. But then again, whether you stay forever or not will depend on your view on the sector and the view on the general economy and on this company in particular. Now, you have 600 employees down in Borås in Sweden. I think I should be humble enough to say that I haven't really been working really tight onto online retailing. But what I have done before is to try and find the right people to do certain tasks, and then basically to optimize whatever is there already. Mm-hmm. So what we've been doing in Ellos is the company has been running fine all the time. It's just that it had too much leverage. So there was no need to sort of do big change in management or anything like that. We have rather given the management the tools they need to get to where we want them to go, basically.
Interesting. And maybe also an example just comes to my mind is that, okay, retail in theory shouldn't be that difficult, but just take a case study like XXL. And it seems a bit difficult at times if you sort of are on the wrong path and can't redirect the course. I don't know that company in specifics, but it shows that retail can be brutal if you can't get back on track again.
Yeah, and if you have a lot of turnover and you're not in control of your inventory, and you have a lot of expensive leases, and then the interest rates are a bit too high and people are not shopping, and it's easy to go the wrong way. So you need focus. And I think, therefore, to make a revolution in Ellos, it was never on the cards. It was to try and change small details and try to make them better, and also find better financing and work on small things like which products do you make money on, what do you lose money on, which clients do you make money on, and which clients do you lose money on, and try to direct the marketing in the right direction, which is much easier now with, again, we're using AI as a tool.
A big question on interest rates generally. You're into that, of course. You have a bond fund. US interest rates, independent organizations or institutions like the Fed. How do you look at, setting the interest rates going forward? Do you feel like that's going to become a more and more political decision, or is it too hard to say?
You can see it's partly that, I think. But what we see and what we saw now, the short-term interest rates have gone down But the long-term interest rates, 30 years, for example, have gone up. So that means that the market is kind of adjusting in the long end, and it becomes only short-term financing in the end, which is quite difficult. And I think, yes, there has been maybe some political influence on the interest rate, but at the same time, the central bank in the US is still independent enough for that to be okay, I think.
But still, given your knowledge of this market for so many years, isn't it a fascinating territory if you look at UK, France, the government debt, and have at some point be restructured and the ripple effects from that? Do you think that we're, let's say, put the broad lenses 10, 15 years ahead, we're going to see some interesting market dynamics going forward because of demographics, debt levels?
Yeah, I mean, one issue now is that you have in the Western world, you have a lot of governments who want to please the people. And what these countries really need is a hardworking population that understands that they need to work in order to get take out all the rights. And the more people who don't work, the more difficult it is to run a country. So we saw with Liz Truss in the UK a few years ago. She was elected, and her economic policy was definitely not liked by the market, and they had to change very fast, and she was prime minister for 45 days or something. In France, we see a bit the same issues, that if you try to do the right things, you are kind of thrown out of office. I think in many cases, there are countries in many cases need to be on the brink of collapsing before people understand that they have to go back. Like a bit happened in Greece, for example. And nobody's hearing about Greece now. It works quite well. I think it also helped that COVID made it possible to pay with cards everywhere. But yeah.
But from your perspective on the high yield market, what is sort of your quick observation on the market opportunities going forward? Do you see anything special or business as usual?
Yeah, I think the issues with the long-term interest rates and the short-term interest rates going in different directions, and that we really don't know how government spending will be going forward, if it will be sustainable or not. I think it's still important to not be too stubborn on fixing interest rates. So in the fund, we still have quite a lot of floating rate notes, or majority floating or short duration. So we're still working mainly with corporate risk in the fund. You don't get paid to take a lot of risk at the moment. Risk-free interest rates are still high, so we can kind of surf a bit on that. And what we see, long term, very often the market's giving at some point. So that at some point you will get better paid to lend companies money, and then it's possible to play more on duration of the bonds, for example, and also maybe fixing interest rates.
Got it. So one of the reasons you're here in Oslo is because you're gonna give a presentation for young professionals who want to become an investor or work within the investment field. So just first principle, if you have to start broad, what is required, in your opinion, to become a successful investor?
It's a very good question. I think number one is hard work. Number two is that you have to believe in yourself and be an optimistic person. and I think it's important to become a good investor, whether it's in credits or in equities, you need to start with the credit. Always start with the credit. Always think that when you invest in a company, you're actually lending money to that company, whether it's equity or debt. And you have to have a clear idea of how to get that money back. When you go into, if you invest in a company, for example, It could be a super good owner, like you have had John Fredrickson and Tor Olav Trøim, a good example of owners who pay back if they can. It's not always that they can, but if they can, they pay back. They get the full pricing in the market. So they are usually priced to the underlying values or more. Then you have good companies with good owners that are maybe not so working so hard for the shareholders. In that segment, for example, in Norway, you have Wilhelm Wilhelmsen at half price, always half price. You have CMB Tech in Belgium, also half price. Bonheur with the Fridolfsen family, also discount. Now, at the moment, 47% discount to NAV.
Olav Thon as well?
Olav Thon was, but then when he put everything into a foundation, it changed a bit because it was not so important anymore that the discount was high due to the wealth tax in Norway, for example. I mean, so you have to understand the intentions of the main owners, and wealth tax is one of them. That if they have a listed company, if they're too nice against the shareholders, then their wealth tax is higher. So if they have a view to keep these companies in eternity, one have to really think sort of, okay, what are the incentives for these investors, these owners, to be priced at full value. If they are there to grow fast and they want to list subsidiaries and so forth and keep control, that is a very strong incentive to actually have a low discount. So you see examples of companies that has been trading without the discount is SalMar, for example, where Gustav Witzøe has been very forward-leaning and where he's been very interested in using the market. And if you want to use the market proactively, then you have to treat the market very nicely.
Yeah, it's interesting because it sort of reminds me of, the Charlie Munger quote that, understand the incentives and then you should probably understand the results. So what you're basically saying is that if you understand the ownership's incentives or the way they're thinking about it, like you just explained, in order to invest in company X, if it's a company where you believe that they are incentivized to not maybe push shareholder value, it just means that in order to invest, you need to have a discount and maybe a discount again in order to have a good journey. Because the dangerous path is maybe to compare two companies and the NAV and stuff like that look similar, but the incentives are a bit different. So then maybe you don't get the return as you should expect if you just compare steel with steel without also comparing the ownership.
Exactly. And I mean, in Oslo Stock Exchange, you have the worst example is Ian Hui Shipping. And I've never seen the guys who run it, but I see that they take basically the whole profit from the company. So that category becomes uninvestable. The other companies I just mentioned are totally investable. It's just a question about what the price should be. And usually that's a function of the dividends. And again, the dividends is a function of how much money the owners need to run their families.
Definitely. So you said to work super hard to understand incentives, but from my perspective, having done, quite many interviews over the years, I think one thing that is very typical is people who tend to succeed are naturally quite curious. And that can be in many fields at the same time. And I know for you as well, I mean, you're in different asset classes, you can fly, you have a lot of other hobbies as well. Don't you think that curiosity is also a key driver that push new knowledge?
Yeah, I mean, everything you learn, you will learn new drivers and understand a bit more. I think having kids helps as well. That's why I own Explora, the watches for kids, because I understood that it was, even I managed to manage my kids' watches. And that I failed on with Apple because there were too many options. Explorer have understood that it's only a few options and the prices are low, and the only idea is basically to to make sure that they provide kids with safe hardware.
Definitely. So what else do you think is necessary? I mean, look at your own journey. You've been through many ups and downs, but if you look at the recent years and the wealth you have been able to generate, what are the key lessons there to find your circle of competence and push the winners as hard as you can? Or is it to have many bets on the table at the same time? From my perspective as well, just to give my outside analysis, it seems like, in my perspective, you're quite comfortable having several bets at the same time, be it hunter group, be or this or that, because you understand that if you control or can manage volatility as well, you can have that upside become very attractive, because you also understand that you're not going to bet your entire wealth on one case, but you're comfortable taking the bet because you see an upside as well.
Yeah, I think the most important is to only invest in something if you really believe in it, and make sure that you go through the portfolio every day. And if you don't believe in the stocks you're in, then you shouldn't own them. I think it's too many people who put, if you just put it in the stocks in the closet, or again, I think the best for us now is that most of the market is active. No, is our passive investors now, index funds. Fantastic for an active investor, because you get huge kind of mispricings when, if something falls, everybody, the algorithms goes out because of stop loss, and then the index funds have to sell when the stocks become, the price becomes less, and then that again sort of in a circle makes the algorithm sell even more. And then to be an active investor and also not only using AI helps. So I think it has been actually easier than before to find kind of outliers in the market the last 5 years.
Which segments piques your curiosity the most right now, or specific companies in the Nordic sphere? I know Novo Nordisk has, of course, been talked about. Is that one? Or
since Monday morning, Ørsted as well, which is down, I think, 75% the last year. They have to raise now $10 billion, I think, the next week. So, and at the same time, they almost lost one of their biggest projects, wind projects in the States, because of a stop order from Trump that was turned 180 degrees on Monday in a court in the States. So it's kind of sometimes when it becomes, that's a good example of probably where the models are just selling it down. And it's interesting to remember that 4 years ago, Ørsted was, I think, bigger than Equinor. And now Equinor is significantly bigger than Ørsted. And this is, the trends, it becomes comfortable. People are just buying stocks because everybody else is buying it or selling. And so I think the interesting part with Ørsted is that it's very interest rate sensitive. We just talked about the interest rates are going in each direction, but it has fallen. It's discounted that interest rates will stay high for a long time. And that's not necessarily the case. I think that's very interesting. When they now raise $10 billion probably, and hopefully that is the rock bottom.
Other segments, I mean, it's been such a fantastic journey for yourself in car carriers, offshore, DOF. Is the good times over now, and should we exit those sectors, or you still feel like there's fundamentals to find great companies at a fair valuation?
Well, I mean, what we see now, I am still in car carriers a bit. First ship being delivered in November in China, that we have invested in together with 3 other investors. I think there are so many cars being produced in China that will find new homes. Not necessarily all of them in Europe or the States, but definitely part of that is Europe and the States, because it's so much cheaper to produce in China. but they will go to Africa, to India, to South America, and it's a lot of them. So I think the big boom is maybe behind us. It is behind us, that's quite clear. But it's whether it will be a complete bust, I don't think so. It's more selective than it was before, though. So I mean, I would say the last 4 years I've been into shipping and offshore only, almost, and a bit real estate. Now it's much more spread out. It's in real estate, it's in online retailing, is it now, with offshore wind and with Ørsted, and it's Novo Nordisk with in the pharma, big pharma. I don't believe as much in one sector as I did 4 years ago, but I definitely believe that shipping and offshore should have a place in the portfolio today. And we see it, for example, in the tanker market now with Hunter Group, where which has been a very tough investment the last few years. I mean, Hunter Group is very easy. I mean, it's 2 VLCCs that are chartered in, fixed, around $51,000-$52,000 per day each. And then they're chartered out spot to the same counterparties. And we have now 2 high seasons and 1 low season left of this, which is 1.5 years roughly left of these contracts. And well, the first 1.5 years we have lost money almost every day. And then suddenly now we're having a margin of 100% the last week. So where it goes, I don't know. But it shows that the dynamic in tankers is there is still a market. It's still a market there, which is interesting, and is obviously too many variables to analyze it properly. But what we do know is that the order book is not so big, and the next 1.5 years is not so many ships coming, and that's an opportunity when OPEC has started to produce more. That was also the case when we invested. It's just that it has been so many variables from every side in the tanker market. For example, with the sanctioned fleet being huge and transporting oil from Russia to India, for example, has been a big part of the market. Now the market has shifted more towards longer distances from South America to China and from Middle East to China.
Definitely. So do you think that experience from Hunter Group do you believe you will like to set up those models more often as well? Or is this a one-off because the situation was quite unique, there was a company available? Or do you feel like it's been so much pain and fun and now good times that you actually want to set up structures like that on the stock exchange going forward as well?
We're able to do it. We could do it, but then we have to believe in it 100%. I would never go out with anything if I didn't believe in it 100%. So that goes with Ellos, that goes with Jactel, where I'm in, that goes with Hunter Group. I have put my money on the line and my neck on the line. And this is, there are a few things, I mean, main rule. I mean, you go to the market, we want to be best in class. We want to be just as good as those I just mentioned, like Fredriksen and Trame, who treats the shareholders well. We see the value in that because then we are able to launch new projects later. And investors should be totally... I cannot guarantee how it will go, but what I can guarantee is that I put a lot of money on it myself.
So, given all the sectors we have talked about now, it's obvious that you're quite busy and you have a lot on your plate. So, take us back to Switzerland, up in the mountains. How the hell do you structure all these projects into a good week?
It's a good question. I usually don't manage, basically. No, I think these companies have good people in them, and you really have to understand your role, that you don't go too far into everything. Well, when the problem is when something happens, when there are deals to be done, for example, then it takes too much time. But it goes in waves. And I think now there is one, I mean, if you look at it broadly, one of the reasons why the portfolio now is broader is that we're in a kind of a shift in the market where there is a chance that interest rates will will fall, and then all sectors that are interest rate linked that have been smashed the last few years because of interest rates now are sort of neutral or positive. Whilst on the other hand, in oil and oil service and shipping and so forth, there's still a lot of long-term contracts to be made. Apart from the tanker bet, which is totally spot, of course, as we just mentioned. And in there, it's still good cash flow to be made, but it's kind of the big wave is behind us. So trying to see it top down and then bottom up, you need to have good owners, good management, and a sector that has the future in front of it normally.
Got it. So just one segment I want to spend some minutes on as well, which I know you have a huge passion for, is of course tourism. In general, how would you say your experience has been in that sector as an investor? Because one thing is, of course, cruise companies, hotels, you're in a bit of everything, of course, but that as a sector in general, why you're so passionate about it, what has been the history or lesson so far, and what do you envision going forward? Because you have many projects going on there as well.
There's one thing I would say is tourism is quite selective, as you know. I mean, it's Svalbard and it's Tromsø, which is obviously where you come from, and then the Verbier area. That's where we have active ownership. And I think what is common denominator of those three places is that they are quite unique in many ways, and it's impossible for example, the Chinese to compete with it because it's unique. It's here and there, and I think you could look at Europe a bit as the playground for the whole world. And if you look at all of these three markets, it's kind of a derivative of the tech billionaires. Every time you get a new tech person making a lot of money, and they want to go to the special places, and that's where we come in. So I'm not really bad at picking the right AI company, but what I see is that I know where they're going when they made the money.
And great nature is a scarce resource, right?
Yeah. It is, and I think going forward, I think as AI is coming in, it's having high-quality tourism with high-quality service around, with, again, taking people from cities out in the wild, and people obviously living outside of cities and doing more advanced things. But just to get out in the wild, in Svalbard, for example, is not for everyone, and you need to have a good guidance, and this is where a lot of new jobs will be created going forward.
Definitely. So the last time we spoke, people can check out that recording, but you weren't super optimistic about Svalbard in terms of regulations and all the discussions. Has that changed, or are you still a bit puzzled by the clear vision of Svalbard? Where are we going? Or is that always like a hard thing because there's so many topics, even geopolitical topics, being thrown at the table?
Yeah. I think the big picture is what I just said. I mean, it's a unique place. What I have said is that people will come to Svalbard anyway. Norway want more Norwegians to go to Svalbard because of Norwegian sovereignty and so forth. They want people to live there and work there. Now, and also visit Svalbard as tourists, being Norwegians. Every time they come with new regulations, that hits the average Norwegian more than the average tourist from elsewhere, because Norwegians in general, they're very used to the outdoors. They want to push the limits more than many others, so there will always be a market for our hotels in Svalbard and our adventures in Svalbard, but typically there will be the Asians who will find it very interesting to go with the bus inside Adventdalen to see the Northern Lights, whilst the Norwegians, they come up in the midnight sun to ski tour, for example, or Yeah, and the Western Europeans. So it's kind of what I've tried to say is that the government, every time they limit us, they actually work against themselves. The problem is that they really don't understand it. And so this goes with many things in Svalbard, unfortunately.
Yeah. But still one of the most unique places on Earth, I can imagine.
It is. And so I'm 100% sure that we'll have visitors up there. And if you look at the Norwegian side of the market or the Western European side of the market, I think, it will always be a market also for them to come up for conferences and so forth. But Norway has to think before they take away all the X factors.
What's been your most unique encounter in Svalbard? Is it like a ski trip, a polar bear experiences? What is like top of the pops in your experience? Because you've been there a lot. So
yeah, no, it was a situation a few years ago when in one of the outposts where around midnight, two friends of mine were going out to have a cognac. And these are very, very experienced people who's been out a winter night before, to put it that way. And the first guy walks out and he forgets his gun inside, but brings his aquavit, or cognac. And he sees something, he sees what he thinks is a model of a polar bear inside the garage, where the food storage is. And he goes into his friend and says, I think that's a really nice model inside the garage. And he comes out, and then the polar bear walks out straight in front of them, basically. And they were standing there looking at their bottle and looking at the polar bear, and the polar bear looked at them, and they finally figured out they had to run inside. So yeah. That
could have potentially gone quite bad, I assume.
Yeah, but the thing is, the polar bear was inside having dinner. Our breakfast for tomorrow he was eating, so he was happy.
Great story. So, I mean, in Switzerland, in Verbier, you have gone into this hotel. What do you know about running a smooth hotel? Is this also going to give you new experiences and new lessons, or is it just, again, niche, high quality, and it's quite easy?
I mean, quite easy. So I think a good owner and a bad owner can make a big difference. And I think also focused owners, few owners versus many owners, makes it easier to be a good owner as well. This hotel is rated the world's best ski hotel several times, W in Verbier. So it's managed by Marriott, but we have all the risk upside and downside in the hotel. I think Verbier is just a unique place, and this hotel is now 12 years old, and it's modern. It's in the middle of the town. It's almost impossible to build something like this. So what I saw was a piece of real estate that has a lot of potential of also doing good for the town we live in, but also economically over time. And it's a bit like, I wouldn't call it's a bit like Bitcoin, because Bitcoin you can, I don't know, if there is someone hacks into the system, Bitcoin can disappear. Whilst when it comes to this hotel, it will probably stay there.
I got it. So we don't have to discuss crypto this time either. That's going to be impossible. Yeah. But, I mean, you're so curious. So at one point, if it continues, you're probably going to dabble into it at some point.
Yeah, but I think real estate in special places is Bitcoin, kind of. It has the same drivers. You don't make it anymore. And I think that's the whole point. To invest in real estate, you have to invest in unique real estate. I think real estate, and especially I think when it comes to tourism, is one of the areas where AI won't change much. I think AI will actually increase tourism rather than decrease tourism. And whilst, for example, when it comes to office buildings and so forth, it's much more dangerous because it's so easy now to sit wherever. And this is also, again, what we see in Verbier, that a lot more people want to live there all year round and work from there, which was not possible 10 years ago.
Yeah, that's very true. Any reflections on you're being situated in a small village in Switzerland? Because I think maybe the unique thing you did, I mean, now you did your reps in London and in Oslo, so you kind of been there, you've seen it, you know how the financial system ticks, but then you think it's a benefit to be a bit on the outside, having it a bit more calmer. So is that actually an edge in being an investor, that you're not constantly in the noise, that you can sort of go in and out of the noise?
I think it's very nice to have been inside the noise, and it's very nice to go inside the noise. But then when you're not in the noise, you go out and you sit and you can think longer term, and you can spend more time on accounts and so forth that are very important to understand.
Yeah.
And trends.
And maybe also just a perspective. I mean, you're a Norwegian, you lived abroad for many, many years. If you're just staying at one place, you kind of are, it's easy to become a system thinker. You think the same as your friends, they also from Norway, you invest in the same things. While if you're more in an international community, I would just assume that, you know, more diverse thoughts and ideas can be generated as well.
Yeah, I mean, the world is, Verbier is a melting pot for international investors. I mean, I think in Verbier alone, there are at least 400 large international investors. And you get a lot of good ideas and also bad ideas there. But I try to sort of just try to not go too far away from my roots, because that's where I have an edge.
Exactly. So, I mean, there's no sign of you wanting to slow down, invest less, following your kids more. I mean, I know you do, obviously, but it seems like you're more motivated than ever. So I'm just curious, do you have a clear perception or idea of your scorecard, what you want to be either remembered as or what you want to achieve? Or is it more like, this is so much fun that I don't really think about the long term? I just think, what's the next idea, next investments, next problem? Or do you have like a broader sense that, okay, the trajectory has been so interesting that I want to maximize all the potential in wealth creation for myself and shareholders? Or
it's kind of, it's kind of a sport, and I reflected a lot about this today, because one of our fellow asset managers, Morten Astrup, died suddenly.
Tragic.
3 years older than myself, and he worked until the last day. Obviously, he knew that he was ill. I understood well today, but he kept on going, and I think it's a bit the same with me, that I kind of, it's so much fun and to work. It's so much fun to try, and it's like playing Monopoly for real every day.
Yeah, or constantly working on the biggest puzzle in the world.
Yeah,
that changes.
And there's nobody telling you what's right or wrong. It's basically the bottom line every year tells you whether you were right or wrong. But and you have to try and do it your way, and try to not think about how everybody else is doing all the time, because that's a waste of time. Try to rather figure out sort of why did I do this wrong, and how can I do this better next time.
But I find it a bit interesting when I read about you in the news, because it says that he runs his family office there. So, but it's not a huge system. It seems like
No.
So, and is that also the plan going forward? Do you feel like to be able to set a new structure and have more general managers that would just clutter everything, or would you at some point say that, okay, this guy responsible for tourism, this guy, and then separate them, or is that?
I think what you need is like with AI especially. I mean, we're getting a lot of economies of scale. I think typically you need in asset management, you need two operative in the office every day, or sort of two operative. Like we have in Store Bond for today, we have 2 fund managers plus myself as the CIO and heading the investment committee. And I think in the family office, that's what you need. And then you need a powerful back office with enough people. But again, you also there need 2. You need 2 plus 2 plus 2. You need, because AI can do a lot of things, but you need, you can't clone people. Sometimes you just need to be there physically. Yeah. And I think keeping the organization as lean as possible is important, because Yeah.
Ownership is probably quite high then, because if you add more people, ownership can be, a scarce thing, because people can always say it's the next person's fault.
Exactly. Ownership to the actual task, yeah.
Very, very interesting. So it's a bit fun, because I feel like you've always been a bit ahead of the curve. You moved out early to Switzerland. Now, I don't know how to describe any analogy of all the people following you, but early mover. Also keeping the organization super lean. Like you said, I think now with this new technology, you probably are able to create enormous of value being a very, very small team. Because AI, you can just scale it to the moon, right?
But you always need to be at least 2 on everything because of what I just said. That's and also because somebody can be run over by a bus or something. You need a continuation plan.
Yes. So time has actually run so fast. So I just one last segment, because like I said, you're here in Oslo to give some advice to people. Correct me if I'm wrong, but I also believe maybe a pivotal moment for you was to have incredible people around you quite early in your career. People like Arne Næss Jr., people who actually were maybe a bit larger than life and actually installed some principles that you don't necessarily have to do what everyone else is doing. You can actually create your own path. Do you think that in hindsight it's been quite fundamental to have exposure for people showing you that there is a different way than just doing like everyone else is doing?
Yeah, I think so. I think I would never have moved out to Norway without Arne Næss being my mentor. He really showed me that was possible. I mean, he was a pioneer in being everywhere and nowhere. When he climbed Mount Everest in '85, he did one of his biggest shipping deals. It was a Sherpa coming up with a letter to him. And he wrote yes, and then the Sherpa ran down again. And he just sold, yeah. So this is, I learned from him, and also this has brought me to, I think that was what brought me to Svalbard, for example. And that also, because to look at Svalbard almost 30 years ago was not sort of mainstream. I think, because it was just, they were doing coal mining there and some tourism, but it was not very professionalized and so forth. And the same with living in the Alps. I think that's not something that was very common to. It was always, when I started being in the Alps, it was always, you always needed an excuse to be there. Whereas now it's like, okay, so you live there, yeah, fine. So everybody understands that if you are motivated, you can always do a good job wherever you are.
So if you can, being able to find a mentor quite early in your career can be one solid advice for young professionals at least.
Yeah. And just be curious and work really hard. And again, work really hard and don't believe everything that comes out of ChatGPT. We had an interesting situation this weekend where we were working on the formulas for the subscription rights in Ørsted. And where ChatGPT came out with a complete nonsense. And we discussed back and forth. I did not understand. And then in the end, the answer was super simple, but very simple. But when the input to ChatGPT was a bit wrong, and then the answer came out completely wrong. And I think everybody who can use artificial intelligence, but also can think by themselves, is quite valuable.
Don't outsource critical thinking.
Exactly.
I think that's the perfect ending. Morten, thank you so much for taking the time. As always, it was a pleasure to host you.
Thank you for having me.